Hello, everyone, and welcome to another episode of Let's Talk podcast. My name is Dimitri. This is my co-host Akim, and our guy is a special guest, a fellow popular investor on eToro. So yesterday was the press conference about the decision if they're gonna keep rates as they are, or hike or cut. The announcement was made early in the day that they're keeping them as they are. So it wasn't a surprise there, but at least I was waiting to see the press conference. I want to hear it from his mouth. I don't want to hear it from a reporter and all that. I want to see it with my own two eyes. And my conclusion yesterday, and I don't know if you agree with me, you're welcome to disagree, is that the Fed is in a very strange position that if they try, even though the correct move here with inflation trending upwards in the last 3 months, it will be to hike another quarter point. That will be the correct move to do. But if they do that, they're putting the economy into risk, rolling into a recession. And what do you do when you get a recession? You have to cut rates. Cutting right here, it might be responsible because inflation, like we said, is trending the wrong way. So they just chose to do nothing as the move. Just let's wait it out. And on top of that, the election is approaching. So if you don't cut here and you don't hike here, I don't think it's going to get any easier getting closer to the election, because then you become political. Then the right is gonna say that you're using your institution to help the president and all that, and they don't want to get into that. So the way I see it, we're not getting a cut until after the election, unless the next 3 CPIs come well under the estimates. What do you think, Aga?
When is the election exactly?
November 7, right?
In November.
Early November.
Early November.
Yeah. I mean, about this, actually, I'm thinking that, is this situation where you know that something will happen, and you know that one day the cuts will happen, but when it doesn't happen right now, you kind of like relief. It's like, okay, it will happen anyway, but like when there's no decision of cuts, everyone is like kind of released. But at the same point, I'm not sure if that's a good point, because I'm afraid that together with election, the cuts will happen in the end of the year. That's my opinion. Let's see. And then we will be able to see like a lot of mess in general in the economy and in the stocks. So for now, for me, was also like, okay, no cuts, like, it's fine. And I saw also like comments of people saying like, yeah, we are relieved, it's fine, but it will happen anyway. It's like when you have important meeting at work and they are postponing and you're happy that it's postponed, but
is high rates help nobody.
Demetris, you said they should have hiked. Did I understand right in the beginning?
No, I didn't say that. I said let's say if you were someone that had no interest with markets and money, and you don't have a mortgage, and they present the data to you and they say, we raised the rates so we can get inflation down.
Mm-hmm.
We went up to 5.25%, 5.5%, but inflation still trending the other way. So the correct move to do, I'm not saying they should have done that. Correct move would add another hike and just finish the story with inflation.
Inflation is trending lower. It just not
3 months I'm talking about.
Just the last three months.
Yes.
Yeah. But is it enough? It's not enough based on 3 months, right? Because the start of the year is usually the one where you have salary increases, promotions, bonuses, etc., and where people have New Year resolutions where they want to buy a new car.
I agree with you. I agree with you, but and the whole thing becomes more
Because when I looked at the inflation from the first 3 months,
yeah.
I looked really at the categories. What I'm seeing, it's shelter that is causing the most increase,
Mhm.
right?
Yes.
Due to rent, in
Yes.
fact. But rent is absolutely not rate sensitive. If anything, higher rates cause rents to go up because higher rates, interest rates, mean that people cannot buy their houses. So there will be more demand on the rental side. People who cannot buy the houses because rent rates are so high, they need to go rent. And that's why rent is so high. And in my opinion, this explains a bit the phenomena that happened early the first 3 months this year also, why inflation looks like it rebounded. But when you look really at the subcategories, it's just rental that is high.
But you were expecting Akim to what you expected from the yesterday decision, or what do you think like would be like better?
So in general, we moved lower. Inflation moved lower since last year, right? So even if we kept the rate, we've been keeping it now at this 5.25 to 5.5% for a while.
Mhm.
Inflation has been going down since last year. We actually became tighter. So the rate became tighter without moving, So the Fed actually further tightened. So in my opinion, you don't need to hike more. Cutting in general, so this is a bit maybe not so orthodox, but in general, I think you didn't need to hike rates. Because if you hike rates, you make things more expensive.
Mhm.
Because it costs companies more to produce certain things. And the problems we had are supply chain issues because China was completely locked down for a while. And then you had Russia-Ukraine conflict, which both disrupted the supply chains. So what we needed to do was to support the supply and not to try to break or cut the demand like we're trying to do now. The problem is the supply. And if you have high interest rates, the producers who produce stuff, they need to borrow money at a more expensive rate, and therefore they make their products more expensive. So higher interest rates, in my opinion now, make inflation go higher. And it's the same with housing. Higher interest rates, a lot of people, a lot of families cannot buy houses anymore, and they need to go rent. And rent also make inflation go up because it's a very important subcategory in the inflation data. So in my opinion, you didn't need to raise it in the first hand. But now that it's high, I would say that Powell should do what he's doing. What I mean is that he doesn't care about politics, and he's been saying it. So I don't really fully get the political argument because I think the guy doesn't care at all. When Trump was president, he didn't care. I mean, he did his 0% rate policy, and I think the Fed, or at least Powell, doesn't care about politics, in my opinion. There's been a lot of pressure already last year and 2 years ago that they shouldn't hike. This really affects the poor families. You had a lot of Democrats writing letters to Powell say, stop your rate hikes. This really affects a lot of poor households. But I think he's the type who really doesn't care. Like he has his dual mandate in mind. And if inflation goes down by July, I think he will cut in July, or he will cut in September. I think he's not going to care about the election, in my opinion. And I'm not 100% sure how it anyway affects the election outcome to have a 125 basis points cut. Because what he did yesterday was actually more easing than one single cut of 25 basis points. What he did with the balance sheet, he now the runoff. So that means the maximum cap of bonds that are not going to be replaced went down from 60 billion to 25 billion yesterday. It's a little bit technical, but basically he decided now, or the Fed decided to drain less liquidity from the system yesterday. And this affects more than one rate cut.
And I was I was thinking, we talk so much about investing and about on the podcast, and we can disagree on some things. And regarding your argument about the Fed, and before I get to it, let Aga give her opinion about rates and about where the Fed is going from here, and then I'm going to follow.
Yeah, so I think, as mentioned before, that I think the Fed decision, like I was expecting different one. So now I believe that if the decision, like yesterday, that it didn't change, I don't think it will change for a few months.
Mhm.
I also agree with you, Akim, that like the elections will not have a big influence, but I still think that in general, in the end of the year, we will see more changes in this. I also don't base my investments on the Fed decision. So let's say I will not wait for the Fed decision to buy stocks. So also that's something that I wanted to ask you guys, if you have this, that if you wait also for the decision to buy or sell some stocks. Yeah, if you can let me know, so you can also like clarify more, how your investment works.
How is affecting your buying and selling, Akim, the Fed?
So this is affecting just the weight that I put in a certain sector.
Mhm.
So now the rate increase, I mean not rate increase, but the no cut, I think affects negatively the tech.
Mhm.
And actually, I'm accumulating more of tech stocks because I do expect the cuts to happen later this year or next year. So I buy more tech and I buy more TLT.
Mhm.
TLT is the ETF that holds government bonds. So every time the yield goes down, and with rate cuts, the yield on government bonds go down, TLT rises, right? So I continue accumulating, and TLT is my biggest position by far. TLT plus TLH is very similar to TLT, a bit less volatile. Both together are now 10% of my portfolio. So I tend to accumulate when one sector goes down and that I expect it to rise. This is the only way it affects. It doesn't affect how I choose a specific stock within a sector.
Mhm. Yeah, it doesn't make a difference to me either. I just follow the Fed because it's interesting and because I want to know about monetary policy. And even though I'm going to argue why it matters in politics, it has no difference to me about buying and selling. I'm not gonna buy anything prior to the Fed meeting because I know it's going to be volatile. I'm going to try to buy after if the markets lose their minds because he said something, a cryptic message during the press conference. But it doesn't make a difference to me because I'm a long-term investor. So if by saying something Meta is going to drop 10%, then I'm gonna buy Meta, but it doesn't really make a difference. And let me get back to the politics. So inflation, it's a big deal this time around because of the 1970s and 80s, right? When inflation went up during the 70s, then the Federal Reserve at the time increased rates, inflation came down at around the same levels we are now, around 3%. And then they will start cutting rates and inflation shoot up and went further when it was in the early 80s than it was in the 70s. And then Paul Volcker came and put the rates at 15% and got the economy into a recession. So that it was repeated by Jay Powell in multiple press conferences. So I know they take into account.
Powell was an intern, I think, even when the inflation story happened. Yes, in the 70s. So I think it affected him more than maybe he even wants to admit.
Yes. So that's one. You're correct about that one. As far politics, Jay Powell was put as the chair of the Federal Reserve, believe it or not, by Trump.
That's a bit the problem he has, is that he's Republican, actually. It's
Yes.
known everywhere that he's Republican. So,
Yes, he's Republican,
I
but
mean, nominated him now, so
sorry?
I mean, the Trump nominated him, the Powell.
yes,
Trump nominated and he's Republican. So that's why I think he can still do the cut, because the cut would be in favor of Biden, right? The current president, if the cut happens before the
yeah.
election. So I think for him, it would maybe be easier even to do that first cut while Biden is still president, if he cares about the political argument.
But he's not going to be the chairman after the election. It was clear by Trump and by Biden. It wasn't really clear. It was like speculation that they're not going to let him they're not going to let him be the chair for one more term. So that's the end of the road. And you don't want to be the guy that failed to get inflation down. I believe that has a lot to do with his moves. He doesn't want to be the guy before Volcker, because I don't remember the guy before Volcker. I remember Volcker that got inflation under control. So he wants to be the one getting under control, okay? Then the election, then the new president, whoever that is, gonna get a new chairman and just ride into the sunset as a legend and get a job into the private market, into the private sector, because that's the way it works. You leave the Fed, then you become
a CNBC contributor. There is a former SEC guy, chairman, who's now a CNBC contributor.
Or you become an advisor for Ray Dalio in Bridgewater.
Or he joins our podcast as a co-host.
I will have him just to ask him questions about the Fed.
That would be interesting, yeah.
That would be very interesting.
But
So
for you, Demetris, I wanted to know your opinion also, if like you are closely following the Fed decisions.
yes,
When do you think that we can expect some cuts?
so there are two scenarios. First scenario is no, there are actually more than two. So number one, inflation goes down a lot in the next 3 months. That's number one. Number two, we get into a recession. And recessions can come and not even realize it. We're going to realize it after the GDP numbers come, and you're going to say, oh, wow, we were in a recession the last quarter, and then the cuts happen there. If the labor market falls apart, if the unemployment goes from 3.8 now goes to 4.6 in the next 3 months, then they're not going to have an excuse not to cut.
But what do you think is the reason? Because look, Europe, inflation has come now under control. I mean, we're very close to 2%, and the ECB already said, Christine Lagarde, I heard recently, she said, we will cut soon. We are data dependent. We're not Fed dependent, so they will cut before the Fed will cut. It's very likely that Europe will cut. Why in the US is the inflation still sticky?
Because they are.
Does it have to do with the government spending?
No, the government spending
Could it be?
actually slowed down the last quarter, according to the numbers. But they are consumer economy more than the Europeans. They are more consumers than the Europeans. That's number one. And number two, everything is on credit. So, and all the savings they had during the pandemic, when the government were paying them to stay home, now they start spending them. And I mean, there are multiple reasons for it. They import a lot, so they import some inflation from other countries as well. There are multiple reasons, and it's surprising that Europe is in a better position already, right?
Surprising. I mean, the war is in Europe.
Okay.
The war is not in North America, right?
Yeah, exactly. And the ECB is gonna cut. It's gonna cut first for the first time. I don't know in how many decades. Usually, it's the Fed that.
I mean, the ECB exists since not that long, eh? It's since 1998, I think, or
Okay, so 2
the end of
decades.
90s. But since 2 decades, yeah, they initiate the cycle.
Yeah, but the Germans and the French, they were usually following the first lead. So it's interesting this time around. And
Mhm.
that's why I'm gonna go back to what I was saying in previous podcast. That's why it's so difficult to be an investor, because you can't just say, okay, so the Fed is gonna cut first and then the ECB is gonna cut, because that's how always happened. No, this time is different.
Yeah, this time is different. And I think it's good for currency traders. There's a lot of opportunities here. But European stocks, I did not see them rise much. I don't know if it's just my European stocks, but I did not see them rise much. So I don't know. Does it make sense? I'm thinking I'm mostly asking to Aga here because Demetris doesn't
I don't have any.
practically doesn't have any European exposure. But I know Aga does. Does it make sense to be overweight European stocks if the ECB is going to cut first?
Actually, for European, I really have few. It's like really low percentage for my portfolio. So I would say like being overweight in one or another. I would never say it's good, but I think that Europe in general, okay, inflation is lower, but also you have to see like there are many differences between different countries. We have elections in so many countries. So like you can have stocks that, in France, they are like going crazy, and in Germany, they are going low.
Mhm.
I think in Europe, it's more depends on the country, and more you have to analyze the stock, I would say. Like in US, it's more influenced by like worldwide events. And in Europe, it's like you can really have differences between the countries. So I have some stocks in European stocks, but I think it's like you have to really spend time more on analyzing and knowing more the stocks, like kind of trust the stock,
Mhm. Little question to you, Aga, because you are of Polish origin and we don't have any Polish guests. I mean, you're the first guest in our podcast. Is there any Polish stock that you would say it's an interesting one, worth to put in your wish list? I think you don't have any exposure now to one, but is there a Mag 7 or Mag 1 or Mag 2 in Poland that is publicly listed at the moment and ideally available on eToro, but if not, we're still takers of the name.
So yeah, actually, I have to now say that not proudly that I'm not really following the Polish stock. So I was I don't have any. I was not following it just because for a long time I don't live in Poland, so I didn't buy any stock. And for now, I'm not planning to buy any Polish stock.
So you don't see not much potential because Poland as a country is rising very quickly, also economically, and it's catching up with Germany and France and UK, with the big European countries.
But in this,
and I know Amazon is extremely active also in Poland.
But I know that maybe you don't want to like enter a lot in politics in this podcast, but the main reason that I don't have any stocks, any Polish stocks, is the political situation that was in Poland for years. And that political situation made me, I wanted to invest in Poland. Not in stocks, like in something different. Like political situation made me not investing in Poland.
What do you mean?
So it was only a few months ago the government changed. We had for 8 years the very conservative government.
Yes.
They didn't say directly they don't want to be in European Union, but you can understand.
Yes.
It was very risky. Then the war happened as well in Ukraine. That it had a big influence on Poland, and it still has.
Yes.
So
But now you have a very pro-European, right? Very pro-European US. He worked even in the European Commission, I think.
Yeah, so we have so the prime minister, it's Donald Tusk. He was the president of the parliament. He's amazing. Like everyone is like happy that we finally have him. So yeah, now it's growing, but kind of he has to also rebuild our country, because it was really before like more than 8 years ago, like it was still growing because he was also in power. We had a lot of international companies, etc. But then during these years, if the government is saying basically that everything the best it's Polish and we don't want international people invest in our country, then investors are going away. So also for me, I was thinking, and also because of the currency, if I wanted to invest, I earn in euro. I live always like in the countries with euro, and in Poland we still have Polish zloty. it's also a bit risky. So for me,
Mm.
of course, I could buy a stock and then like have a really small position, but if I don't really feel like, okay, I want to invest there, then even though I'm Polish, maybe in a few years it will change because now the government finally changed. So it's a really different situation. And we already had decisions that, that are changing the way of how Poland will be in the future. So this is amazing. But yeah, maybe next podcast, maybe I'll tell you different news. You know that I have some investments, but as of now, unfortunately, don't.
Okay, that's a really interesting insight. I mean, if it was Demetris, I know that he says something and then the week after he does the opposite, right?
But maybe actually, you know, because I didn't think about it, but now you asked me about it. So probably these days I will be like, no.
So you will.
So I'm not, you know, never say never. So
Never say never, I think.
Also, like, you know, if you don't trust the government, at least in my case, I don't want to put money in the economy of the government that I don't trust. So even if it's like the smallest amount, yeah.
Yeah, but you know, I often make fun about Demetrius that I mention it every episode that he says something, the next week he does the opposite. But I think this is actually the best quality of an investor. It's a skill I don't have yet at the moment, but I think really it is the best skill an investor can have to always re-question yourself and to go against yourself, right? To challenge yourself. And I think it could be worse to look into Polish stocks now, and it's also worse to look at different stocks or different strategies, even if they go against you or what you believe at the moment, because being an investor is always about deconstructing yourself and reconstructing. You're always on a learning curve. I don't know if you see it the same way, Demetrius. If that's the reason why you say something and then you do the opposite the week after, or if it's more profound psychological reasons.
No, every time I say I'm never gonna do that, then I end up doing it. Okay, so I'm gonna stop with the nevers and I'm not doing that and all that because everything we mentioned on the podcast, and then by next week, I end up doing something to.
And then I receive a text, Akim, I did it.
And you know
I
what?
did it again.
I'm straight up. I'm gonna tell you if I make a mistake or if I change my mind, I'm gonna let you know. So that's good. But regarding Aga and the way she feels about investing in Poland, for her own reasons, of course, is my sentiment exactly how I feel investing in emerging markets. I much prefer to have my money in euros and dollars than just get them into a different currency. And sometimes it's the politics that I don't like. Sometimes it's the way people do things in any country. And I'm much more confident going to bed at night, and I know that I have Amazon and Apple, and I don't have Apple, Amazon and Google and Nvidia and all that. It's a different kind of feeling from if you wanna look at it from a risk perspective, or if you wanna look at it from any other perspective. But yeah, never say never though, because in the next podcast you can tell us that you found an amazing opportunity in a Polish stock, and you can give us a tip. So
actually, I think I would even check it. You know, you gave me idea. So yeah. So
you know, I'm looking now at the Poland MSCI.
yeah.
It's up 45% in 1 year, so it outperformed the US index.
Yeah.
If you just bought the index of Poland 1 year ago, exactly 1 year ago, you'd be half richer now.
Yeah, I think after elections that they were in October, I think, if I'm not mistaken, or September. Then I remember.
Yes, it started to rise actually in October, really almost exponentially. But if you take the 5 year, it's up only 5% in 5 years. 5%.
Exactly. So
But
that's
if you bought from the election, right, then you would be much richer.
So that's why what I said that it's for me super interesting to follow politics and economy, because now you can see even like, you know, the person like Donald Tusk, who is like friend of all the European presidents, ex-prime ministers, etc. So you can see that people have trust in him, you know, that he will be able to like to keep our country strong. And then you see like how the politics has influence on the index, that for the last 8 years, like no one really wanted to have business with Poland.
Yes.
Because it was
And
like, oh, you're a closed country, like, so, you know, just stay there.
I think this is the thing, is if you want to be invested in emerging markets, so Poland is not an emerging country, but it's an emerging stock market. If you want to invest in emerging stock markets, I think it's really important to have knowledge in politics and to be more of a trader than of an investor in those emerging markets. You have to really seize the momentum, otherwise you might be stuck for a decade or two. So you really have to follow the political news and then trade your way there. Argentina had very similar. The Argentinian stock market also went exponential since the last election a couple of months ago. So I think this is a little bit the risk. You have to be, if you want to be invested in emerging markets, I think you really have to pick wisely. If you want to invest, not trade, but invest, you have to pick wisely the countries that you wish to have exposure to. And I think Poland could still be an interesting trade or even investment now with the new government. I think it might last still a couple of years, the rise.
Yeah, the only problem is, and it's not a problem. I mean, if you can do it, you can do it. Are you an investor and then you decide to become a trader, like in a different? I think that's how I can see myself. I'm going to speak for myself. I can see myself getting in trouble because I have a way of doing things. Just focus on the long term, focus on the companies, and then try to do an opportunistic play in an emerging market. And I'm not talking about Poland. I'm talking about, you know, China and Japan, not Japan, China, Korea, and Southeast Asia, and try to be an opportunistic play, like just to be a trader, and then you can get in trouble, and then you're not getting out of there without a huge loss.
I changed my savings plan yesterday, actually, my retirement plan, not savings, retirement plan. And I gained exposure to 3 regions: Saudi Arabia, India, and Scandinavia. Those are the 3 regions, I think, in the world that it makes sense to invest in, not just trade, but to invest, because I think it's regions that will grow over the future. Scandinavia, we know, very stable. And actually, I think it's the Swedish stock market has been one of the very few global markets that's been performing better than the US over a long period of time. The Swedish one outperforms the US. But I see a lot of potential in Saudi Arabia. It feels like it's going to become the new Emirates. And India, it's the Indian century now. That's my opinion about emerging markets. I think India has a lot of potential. It has the same characteristics as China had, without being communistic, and where they speak English. So this is 2 amazing advantages in relation to China 20, 25, 30 years ago.
So what was prior of changing your retirement, getting into these 3 areas? What was before?
Sorry?
What were the areas that you were invested before you changed it to South Scandinavia and India?
So this is not my eToro account. It's really my retirement account. eToro, there I put all the money that I can. But my retirement account, it was only S&P and some dividend ETF and some high yield corporate bond ETF. But it was really US, fully US. And now I decided to include a big portion, actually, Nordic, India, and Saudi Arabia.
So your convictions for the long term?
For the next half century, yes. It's those 3 regions.
It's Saudi Arabia, India, and Scandinavia. How about you, Aga? What are your convictions in the long term? Some areas of the world that you're willing to invest?
So for me, actually, I was surprised by India when you said now. It's really interesting. I think it's because I'm more like always focused on the long term, just investing, not like, you know, in maybe 50 years. I think more in Europe, I would say. I'm more like conservative in this way. But like it's amazing how also like India can grow, or Saudi Arabia. But I think I'm more conservative about this with Europe. also like I'm following a bit South America, how it goes, but
Mhm.
I think it's way too risky still to, you know,
Yes.
investment there, but it's also really interesting, especially with politics.
Yeah.
What about you, Demetris?
I'm only US.
You
Yeah.
only believe in US. You think
Only
that's
believe
the
in
only country that will continue growing in the next century.
and some Europe, but the India argument, I understand exactly where you're going with India, the demographics, the democracy, they speak English, all that. So I can argue with you
The
about
IT skills, right? The
yes,
tech skills they have,
oh, they are very good when it comes to tech.
a
Oh,
big
they're
pool
very
of
good.
skills. Mhm.
Saudi Arabia, with all the investments, they start to opening up, giving some rights to women, and they try to get investors to become somehow like the Emirates, like Abu Dhabi and Dubai. Scandinavia, I just don't know too much about it, so I'm not even going to comment. Whatever I say is going to be a lie, so I don't know anything about Scandinavia, so I'm not even going to try to argue with you. So, oh, that's interesting. Interesting. You know what? Let me look into retirement accounts as well, because I don't have any. I don't have any.
But I
all
you
my money
already
is eToro.
you already retired, so we can
He's
maybe
already
get
retired.
some tips from you, you know.
Okay.